this, with this structural shift, you could argue, in the bond market, what is it pricing in?
I mean, yeah, definitely another hike was on the card, but I think this morning was probably quite key for at least for us last night for hearing what Mary just said. I think it's true though. I think for the U.S. the long end is a much more important in tightening conditions than actually the shorter end. So I think there is a lot to be said that as the curve steepens, it does help the Fed do some of that tightening itself, and may give a reason to kind of wait and see and just allow rates to stay high for longer without actually needing to move it too much. So I thought that the statement was actually very helpful.
Right. Now, I want to get your thoughts now on this inverted curve, because at its extreme, as you would know, we were negative. Let's use the 2s and the 10s as an example. We were over a negative 100 basis points inverted. We're now at 30. Well, my first part of the question is, when do you think this uninverts? And number two, is this typically is an indication that the recession is behind us, not ahead? Do you think the economy is now actually improving in the U.S. As a function of what the bond market is telling us?
I think that what we've learned this year is that the metrics that we've been looking at in the past is actually not worked out the way that we had in terms of including the inversion of the yield curve. And I think what the U.S. economy is kind of showing us, and this may be kind of quite important for both the Chinese and the Japanese to be looking at, is actually what these wage inflation, the inflation that we were fearing to crack the economy, has actually not done so. Actually, it's kept to a much more resilient economy. So I think, and I mean, this is a great situation for the Fed right now. They've managed to kind of raise quite a lot of rates without cracking the economy. There doesn't seem to appear any cracks, and when they have, like SVB, they've been able to manage it quite well. So actually, that leaves we should give the Fed a bit of credibility for what they've managed to navigate for us this year. Now, the market, the bond market itself, that is a function of more than just kind of what we implied. There is still lots of technical factors, including kind of long-dated demand and stuff like that, which actually also plays into the equation beyond just expectations of recession, etc. There are also kind of other dynamics at play.
Well, I wanted to ask you, there's one theory this week that part of why Treasuries have been trading poorly was because China for years has been stepping back its Treasury purchases. What do you think of that theory?
I mean, I think not only the China, but I saw other central banks too. It is definitely, we've seen a much more resilience in the local market, so more emphasis even here in the region on the local market as well as just kind of the dollar. So I think that's a very long structural trend, which and it benefits the U.S. only when we have a real kind of a confidence issue and the flight to quality. But otherwise, that structural shift is moving away for multiple reasons, right? So I think, yes, I think that is definitely a concern, and actually something that's happening in Japan could be also quite interesting too, in terms of them trying to kind of bring capital back onshore for their own economy to be moving on to their kind of energy transition issues that they're trying to deal with now. So there's quite a lot of those other dynamics beyond the traditional ones that we've been looking at for the last 5-10 years.
Yeah, so I mean, whatever's driving the sell-off, whether it's term premium, trading positive, technical or fundamental factors too, you're still saying it's hard not to be bullish right now when it comes to fixed income. Just give us the rationale behind that.
Yeah. And I think whatever has happened, we've made, I mean, yes, there may be a few more hikes to come. We definitely are reaching the near end, right? It's not going to be another, whatever we face this year, we're not going to be facing the same last year. And we've got through this year without actually a very big crack in the U.S. economy. And I think that should give other kind of central banks to be confident, and actually a bit of inflation is not that bad and it can be managed quite well. I think the Fed was a bit behind the curve, but even there they've managed to tackle it quite well without cracking the economy. And this kind of should allow other central banks, including I think hopefully the BOJ, to be more confident to actually release the YCC policy.